Hello and welcome to NDTV Profit. You're watching IPO Adda, and the company in focus today is Sai Life Sciences. It's a life cycle company which is into the CDMO space. And joining me is Mr. Krishnam Raju Kanumuri, who is the MD and CEO, and Mr. Shiva Ramakrishnan Chittur, who is the CFO of the company. The company's IPO is opening on December 11th, closes on 13th. Price between 522 to 549 rupees per share. The fresh issue comprises of 950 crores and OFS of 2092 crores. It's a TPG backed company. The company's value is at over 11,419 crores at the upper end of the price band. Gentlemen, thank you very much for joining us on NDTV Profit. To begin with, sir, Mr. Kanuri, give us a sense of your business profile and also which are the segments that you work in.
Uh, Thanks for having us on board. Sai Life Sciences is one of the largest integrated discovery and development manufacturing companies globally. We're a CRDMO. We work exclusively with global innovators. We work with companies, 18 of the top 25 large pharmaceutical companies as preferred suppliers for their both their discovery and development needs. We are global in the sense we have operations in Hyderabad, either in India and Manchester, UK, and Cambridge, US. We've been one of the fastest growing companies over the last few years. And we compete globally. We're in a rapid growth mode, and we are one of the key suppliers which people call upon when they're doing anything which is innovative research for new drug development globally.
Sir, give us also a sense of the business climate that we are seeing in, because we are seeing some pressure coming in on most of the CDMO companies. What is the kind of business climate that you see for yourself?
But the business climate was actually very, very bullish. I think if you look at the overall trends, I think India is in for a multi-year growth cycle in the CDMO sector. That's driven by several factors at this point. A lot of Indian companies over years have developed skill sets to be very competitive globally in the CRO sector, both in discovery and development. And there are a couple of global tailwinds at play. One is what we call the Biosecure Act, which is a new law which is coming in the US, which is mandating that companies in the US who sell, US and Europe, who sell to the US government, have to stop working with some of the largest companies in China. And this has created a momentum for companies to start looking at alternative manufacturing in Europe and India. And given the scale of what India is compared to China, the upside potential is very, very significant in this business. And this will kind of flow through the economy in the next, I would say, this it's already started flowing through. I think this is a multi-year, 10-year cycle of growth coming into the industry in general. And there's another law which has come in called the Inflation Reduction Act in the US, which is given the US government rights to negotiate prices with innovative drug companies after year 7, which has to make sure the companies start getting lower cost solutions early on because they have pricing pressures on their end. So India plays a much more substantial role because they need to have low cost alternative to China. So India is well positioned to really do well in these global tailwinds. And if you look at our growth trajectory itself, we've been growing at 30% plus CAGR over the last few years and 50% plus in terms of our EBITDA margins. So the continues for us, the environment is the best it's ever been, and it's a multi-year growth cycle at this point.
Give me a sense of have you been receiving RFQs from US companies with respect to these two opportunities which have come in, and when do you see these coming in, getting fructifying?
So we actually have seen two levels of engagement. One level of engagement is customers we've been working with for a long period of time. Relations are 5-10 years old. We would have been one of their preferred partners in India. There are other preferred partners in China and globally. What these companies have done is they've started increasing the wallet share of what India gets vis-a-vis the Chinese players. So that's we already seen these collaborations expand multiple new products coming in, POs coming in, actual translation POs. But as you will see, these POs are already fructifying, but the CDMO sector it is a slow ramp up period. It takes 2-3 years to see the real growth and commercialization of those molecules. And relations also have gotten much more strategic, where one in the past maybe one department used to work with us. Now all departments are working with us. So basically, there's a deepening of relationship with all the clients we have, and also an expansion in terms of the range of services we provide. But what you will see is this is going to start materializing over the years, because people will slowly start building up their footprint in India, because we need to have capacity additions, capability additions, and we have to match what they're doing in China. So you're going to see this trajectory. And the new trajectory opening up is companies which have not worked in India for the last 10 years are coming to India and trying to find new partners. And we also have gotten a lot of new customers on the table who we have worked with in the US and our Manchester site and our Cambridge site in the US. But now they're kind of looking at India. And because we worked with the past, we're getting a higher level of visibility on those areas. So the the trend is real. We are seeing it, and we expect this to really start ramping up over the next couple of years, because it takes time to get these products commercialized.
Mr. Chittur, come in here. You had a top line of 1465 crores. That's a revenue from operations. In the first half of FY25, it's around 675 crores. So on an annualized basis, it seems that you may fall short of FY24 numbers. Is there a lumpiness in your revenues that come in, or Q2 was a weak quarter?
No, I think as Krishna said, I think our revenues have been growing steadily. We probably established a 30% CAGR, much better than what the industry is seeing, and we are continuing to see that trend. I think what you would, if you really look at the trends of all of the CDMO companies globally in India, the second half of the fiscal year generally tends to be stronger than the first half, and that is reflected in the numbers that you're seeing. But if you look at the if you just compare H1 of last year with the H1 of this year, the EBITDA growth, the margin growth has been significant, and we believe we are set to meeting our numbers. That's essentially where we are.
When you say 30% CAGR growth, you're looking at a nearly 2,000 odd crores of revenues for FY25. Is that the right number to look at? And is there an order book that you have in waiting, or which needs to be executed over the next 6 months?
I think what we mentioned about the CAGR was a historical CAGR. We are not providing any future guidance.
But is that a reference for future as well?
We're not commenting on it this time.
Okay.
I think what we would like to talk to you about is, I think, the way we've built the business over the last 4-5 years, the strategies that we've implemented. If you look at the way we have developed our business, whether it's our discovery business, development business, or the manufacturing business, the overall trend strategies that we have put in place just to be ahead of the market and make sure that we have a long-term sustainable growth. That's the whole story. It's not about a quarter or a year, but it's about making sure that we run a business as consistently growing and consistently growing on profits. That's the whole objective.
Okay. Give me also a sense of who are your top clients, because your top customer has nearly 8% of your revenues, and your top 5 customers have nearly 29% of your revenues. So if you can give us shed some color on the customers as well.
So given our industry and our confidentiality clauses, we really cannot talk about specific customers or specific products. Generally, if you look at where we are positioned, we have the least customer concentration of anybody in the industry. We only have this actually, it puts us in a really good position, because not only do we have low customer concentration, we have a lot of new customer additions coming in. And not only are these products or these customers relevant, all the customers in this bucket are expanding. There are more products which they're giving us, more services they're looking with us on. And we have several other customers we've added over the last 3 years, which are also in the scale-up mode and adding on services and commercial products. So I think we are extremely well positioned. If you compare us to anybody else in the industry, we have the least amount of customer concentration. And also our products, if you look at our product mix, most of our products in commercial are just about to launch or just launched a year ago. So they have a long multi-year cycle of growth under patent protection, which gives us a good growth visibility even in a commercial pipeline. So we actually are very well placed from our customer diversity and de-risking standpoint.
What is the total number of products? If you can give us some lights on, and how many of them on an average are into the patent protection regime, to just get an idea, how what is the runway that you have?
So we have 38 products which are already commercial. We have 11 products which are near commercial in phase 3 at various stages. Of the 38 products which are commercial, there are only 2 products which potentially have uh, patent expiries in 2028. One company, we will likely extend that patent life with some new patents, so there's only one product which is going off patent, for which we already have a good strategy for life cycle management. Rest of the molecules are all very early. They have a good 10-year life cycle ahead of them and huge growth opportunity at that point. There's a long way to go. And so we have a huge number of new products coming in.
Mr. Chittur, can you give us also some idea on the fundraise that you're doing, 950 crores in fresh issue? What is it going to be used for?
A significant portion of the fundraise is actually will help us to retire the debt that we have in the books. This will help us get a better and a strong balance sheet. Also will help us, in terms of future growth, even if we have to do a fundraise or if we have to raise debt. I think this will help the company in longer term. The balance sheet will be much stronger. The balance money is kept for general corporate purposes. I think that's the sum and substance of the use. I think the most important thing is, I think we are seeing a lot of growth just based on the overall strategy, and we want to keep the company ready for making sure that we can do the right things to continue our consistent growth.
Okay. Also, give me a sense of the fact that you have you said you can't mention which are the customers, but if you can give us an idea of which are the therapeutic areas or drugs in segments that you work very closely with.
We work with 18 of the top 25 pharmaceutical companies. This is based on the revenues. I think we've listed as part of our DRHP. I think what is important to understand is, I think we work as service providers to our customers. The therapeutic areas generally are defined by what is the most important from an unmet drug discovery, right? Unmet need in terms of drug discovery, and those are the areas. But the general trends in terms of the business is about oncology, it is about CNS, it is about pain, inflammation. These are a few areas, and then there are the GLP-1s. There are multiple things that are coming into the market. But I think it's finally whatever is important from a pharmaceutical drug discovery perspective is the areas that we generally work on.
And of the 38 drugs that Mr. Kanimuri spoke about, is oncology the bigger area that you supply drugs to or APIs to?
Not necessarily. I think it's a very mixed portfolio, and oncology is a clearly part of it. But we are across modalities. There is no modality which we don't support at this point.
Is it possible to also give us an idea of the kind of expansion plans that you have, given the fact that you have 3 R&D centers spread across Hyderabad, you have Greater Boston and Manchester, and the largest facility being in Hyderabad. Is there a plan to increase your facilities or capacities here?
Yeah, I think if you look at the strategy that we have laid out in the DRHP, I think our objective is to do all of the right things to kind of ensure that we can get a consistent growth. The broad areas, the way we look at expansion, we would look at expansion, one, in terms of capabilities and technologies, which will bring us new technologies, ability to compete with the global CDMOs. The second one will be the capacity addition, which would be needed once you establish capability and technological excellence, right? So these are 2 broad areas which we will do, and our expansion will go across R&D and will grow across manufacturing based on where we would need the deployment of capital.
Is there a reason why your net working capital days have increased to 136 days?
So net working capital, I think the way we look at net working capital, if you really look at it is a function of the business and it's a function of a very specific point in time need. But I think if you look at overall, if you look at in fiscal 22 to where we are today, we've been able to bring down our working capital significantly from where we were in fiscal 22. There's been a lot of measures taken, including going back and renegotiating with customers, ability to go back and actually put processes and systems in place to ensure that our overall working capital comes down. But I think what you have to understand is in the CDMO service business, we are very reasonably placed and at the top of the table in terms of the number of working capital days. And this is on account of the fiscal discipline and prudence that we brought within the organization.
I'm saying this because from FY24 when it was 122, it has gone up to 136. So is there a reason why some of your clients have delayed it, delayed payments?
So the half year is, the working capital looking at on an annualized basis will give you a much better impact than actually looking at a half year perspective. There are no changes between H1 of this year versus March of last year. But what you have to look at is we were around 204 days in fiscal 22. That has come down to around the 120 days that you mentioned at the end of fiscal 24. Our efforts in terms of managing and maintaining this continues, and we don't see any trends that would reverse this longer term.
Mr. Kanwari, give us a sense of the kind of pricing pressure that you see because, as you said, there is a pricing pressure on innovators as well to bring down prices in their home country or wherever they are selling because of the kind of regulatory pressures which are coming in or political pressures which are coming in. You have nearly 65% of your revenues coming from fixed price contracts. So, how do you manage costs, escalations and pricing pressure?
Right now, we don't see a huge amount of pricing pressure because most of our products are under patent and they're early in the life cycle. Generally, pharma companies who you work with, they want you to make a reasonable margin. There's really no incentive for them to kind of really put on the price dramatically. They want a fair and efficient price. And as long as you're fair and efficient, open and transparent, how we work with them, there's really been no pushback in terms of unreasonable pushback on pricing. If any pricing strategies have to come in place, they work with us to figure out how to get better routes to kind of make this material, finding cheaper raw material sources. So it's almost like a joint exercise with our customers to find the best solution, which makes long-term sense for the product. So our relations are really strategic, and I don't think pricing is a real pressure point at this point. It's more a question of how do we work with them to strategically fit in the supply chain, show them the flexibility, show them the scientific capability, to work with them as the molecules mature and are launched.
Give me a sense of the PLI that you have because you are one of the PLI beneficiary. When is that? When is the incentive starts to kick in? And also, because you have an export-oriented unit and you get incentives from Telangana State Industrial Development Corporation, those incentives, how are they going to wane out? And if that happens, what is the kind of impact that you may have on your tax rates?
So I think that one of the good things that had come out is as part of the overall policy to encourage pharma exports is the PLI scheme that was brought in. We are part of the PLI 2.0. I think the scheme started in 21. At this point in time, the scheme is about a 50 crore incentive over a period of 6 years. So from a number perspective, I think it is not significant as far as the EBITDA or profitability is concerned. But I think it's a motivation for the businesses to kind of make sure that we do the right thing. As far as the Telangana incentive is concerned, I think the government of Telangana has instituted an investment policy where there is a one-time payment based on the amount of investments that we have made. The investments were made and approved by the government of Telangana. This was back in 2021. However, there are no further incentives, so there are no impacts in terms of these incentives running down and impacting our numbers on a go-forward basis.
There won't be any impact. So, final question, Mr. Chittur, you had 19% EBITDA margin in the first half. Is there enough scope to take it beyond 20% within the kind of operations that you run?
I think what we have explained to you is how our strategies and how our methodology of working. I think the objective, as we told you earlier, is to kind of build a business that is sustainable on a longer term basis that will provide consistent profitability. All our strategies are kind of designed towards that, and that's really where I would leave this question.
Gentlemen, it was a pleasure talking to you today. Your IPO is opening on December 11th, closes on 13th, price between 522 to 549 rupees per share. It's a fresh issue of 950 crores and office of over 2000 crores, giving you the market value of nearly 11,419 at the upper end of the price band. Thank you for joining us on NDTV Profit today.
Thanks for having
Thank
us.
you so much. Thanks for
Thank
having us.